Hi, good morning. This is Trendy John here at Simpler Trading. So the first thing that I want to talk about is a down day. So most likely I'm putting this video out there. I'm either posting this or Melissa is posting it here in the room. And the market is down today. So there's a couple things that I want to go over, some steps that I would like for you to take in order to not only get ready for today, but to be at a nice end state and just kind of go through the steps of what we're looking for. So first things first, I don't want you to be stuck on a small time frame, say like a 5 minute or even a 30 minute. Let's walk over. We want to start with a 4 and then break ourselves down until we see what we want to see. And here in the trendy room, we are looking for inside and up and inside and down formations. So I brought myself into a 2 hour time frame here on the NASDAQ, and you notice that I have this green zone here and we have an inside and up formation here. We're identifying this level and you'll notice that I have a green box around it. All right, and so I'm looking for demand. Instead of getting up in arms and worried about the fact that we're down, I want to know, are we moving into some sort of demand zone? And in this case, we are. The next thing that I want to look at when I zoom in here is whether or not we've already tested the demand zone. Now, you'll notice this one here, this wick came back to this area, and I would say this is pretty close. So I would have to say to myself, this is not a fresh zone. And when we don't have fresh zones, it doesn't mean that price will necessarily come back and break through this thing. It means that we just need to take note of it, and if price does come back here, it could break down. Okay, the probabilities just get a little bit higher that when it comes back, it could break down even more. Well, here we are several days later. We're coming back to this imbalance, and one thing that we check and say to ourselves, is it fresh or is it not? And you could make a note in here and say fresh or not fresh if you like to. All right, but we already have assessed that it's not fresh, that it's been tested. It did work the first time. Now in this zone itself, what I did was I used this tool here, and let me show you that one more time. I used this tool called the quadrant lines, and we have it to where it's like 25, 50, and 75, and that's where these targets are lined up within the zone. Now remember, the steps that we're taking when price gets to this area on a smaller time frame, we're looking to see if we get any trendy turn signals that show up, and that's for more the conservative approach instead of trying to guess whether or not we think buyers are going to show up here. And I'll show you that here in a second. Now, the next very important thing that I want to talk about is the cloud. Remember, this cloud is resistance until proven otherwise. And if you notice here on the 2 hour, this is what I call divergence. Like the cloud is right there and price is right here. This makes for a really nice potential bounce if our zone is correct. A lot of times price likes to travel back to the cloud itself. Now again, this is on a 2 hour. All right, and so there's a lot of points between price now and that cloud. When we switch over to our intraday mode, which would be most likely on a 5 minute to start the morning to get ready for our PMZ and so forth, we'll notice that the cloud and the shapes and everything kind of changes format, right? So here's the cloud, and as you could see last night, once it broke down below the cloud, this became resistance until proven otherwise. And that's what we always say is in a downtrend, when things start to move down, we want to be shorting in this cloud. All right, the first thing you can do is you could draw a line at the top of the cloud and a line at the bottom of the cloud, and when price comes up here, I want you to look at it like a zone. So the difference between these two would be your risk, and it would be, say, like a supply zone. So when price comes up here, I want you to try and go short as long as you're okay with the distance between these two lines, if the risk is okay. I want you to try and go short and then look for a move like this. Now you may get the red arrows, that just gives you confirmation to look to stay in the trade, and you can cover at any edges, quant pivots, or anything that you may have on your chart itself, and then stay in the position as it breaks down, and again could get back in the trade when it comes back up into the cloud, again as long as the spread between here is okay. And if you notice right here when I'm just teaching you this, the spread starts getting wider and wider. Therefore, the distance between the two means more risk for you. So in cases like this, aggressive, you would just try to short it as soon as it hits the cloud. Conservative, I would wait until price pushes closer up into here, and then I would try to short because the distance between here and here would be smaller than the distance that originally was between these two lines. Okay. Now notice here on the 5-minute, we continue to get these red arrows. We have no trendy turns near the green box, therefore I'm not trying to go long at the moment. You can see what I mean when I say trendy turn. We're looking for the yellow arrows to come in at the levels to the downside. As long as price stays underneath the cloud, the overall sentiment is sideways to down. It doesn't mean that we can't take a trade to the upside. It just means be cautious because your trip to the upside may be a lot faster and smaller than you're used to during an uptrend. It's not until we get above that cloud and this cloud start to pinch a little bit more, get a little bit tighter, and then we could start looking at more of a bull run or some sort of bigger sustained move to the upside. So again, steps, look for your demand zones when the market is going down. Look at the divergence between the cloud and price. Work yourself on the right time frame until you see the formation that you want to see. Get back over to a 5-minute. Understand your PMZ risk for the day. Understand that the cloud is resistance until proven otherwise. And understand that conservative, you're waiting for a trendy turn signal. Aggressive in the zones, you just start accumulating long in the green zones, okay, accumulation. Or again, you don't even have to accumulate. You could say I'm not doing anything until I see some kind of trendy turn, and at that point then you could start accumulating for a move to the upside. If you have any questions, please reach out to me. Have a fantastic day, and I hope you have a great day during this down day. Have a good one.